Hi guys, so let's go over the trade for today. So I won a 1 to 2.63 risk to reward today, so we'll just go over that quickly. And I also wanted to talk a little bit about how I felt doing the trade because I wanted to close that trade so many times. So as you guys can see, previously we went up from this daily fair value gap right here. So honestly, my ultimate draw on liquidity is actually here. So I do want it to go up there, but like overall it is still bearish on the daily. So going down to the 4 hour, on the 4 hour as well, it was previously bearish. Okay, so basically starting from yesterday, we actually turned bullish like around here. So we go over like the highs and stuff, we close above the highs. But right now we're in a 4 hour fair value gap. And I know we were in a 4 hour fair value gap, but the reason why I'm shorting here, even though we were previously in 4 hour fair value gaps like all these times, is because it fits in alignment with all the other contexts as well. So just keep in mind that we're in a 4 hour fair value gap right now, and we're also in this equilibrium of this range right here. So it is a perfect time for it to go down to retrace. It can, like, in areas like this, I usually look for it to either retrace and continue to go up or to just go down, because if it wants to go down, it can just go down from here because we took out this high and we rebalance, right? So areas like this is like high confluence for me at least. So after 4 hour, we go down to the 1 hour. As you guys can see, we have this 1 hour order block right here, which makes it an even better zone because there's 1 hour fair value gaps here, but it's already tapped. And we also have 1 hour fair value gaps here and stuff and here, but this is the only order block right here. After we got into that 1 hour fair value gap, I was just looking for it to be respected. So this candle right here is the 2 hour candle. It's the 2 o'clock candle, right? So basically at 2 a.m. New York time, we closed it within this order block, which is a really bearish sign for me because it shows that it doesn't want to disrespect this order block. Another thing as well is just that on the 1 hour, my draw on liquidity is these two lows right here. So we've got equal lows, and this equal lows is also Asian session lows. This equal low is also sort of like the start of the 1 hour fair value gap that hasn't been filled. So that's like three things as to why this level is a key level that I want price to go to. So that's why we have a strong draw on liquidity. We've also got a strong area here where price might reverse. It took out Asian session highs as well, so that's the third requirement. So that's that there. And then now we just need an entry model, which is the thing that I actually messed up. It wasn't really like a messed up, but it's just I didn't follow my plan exactly. So as you guys can see right here, after we got that break of structure, I just entered because it was like the draw was just too clear and everything. So I entered there and I just had stops above that high. And the reason why I entered this was also because the risk to reward was good. So it's a 1 to 2.63, which is good enough. But if it's like a 1 to 1 or like a 1 to 2, I probably wouldn't have entered it because it's not exactly to my entry model, because usually the entry model is to get a better risk to reward, for me at least, but the confirmation is all there already. So it doesn't really matter if I don't get a better risk to reward because like the confirmations are already there. And we also got a 5-minute fair value gap there. So like the fair value gap is present, I just don't need it to retrace to that fair value gap. So what I could have done is also just wait, and then a 5-minute fair value gap did form here. So I could have entered there as well. So 5-minute fair value gap right there. So I could have entered there, stops above that. That's the high of the fair value gap. So that's the 1 to 3. Now I wanted to talk a little bit about the psychology part. This trade, the reason why I was pretty confident in it was just because of this draw. So that draw was the main thing, and also because this was actually overlapping with a 1 hour order block and a 4 hour fair value gap and a 1 hour and a daily fair value gap as well. We have a daily fair value gap here as well. As you guys can see, we're within this daily fair value gap. Yeah, and like I said before, there's two scenarios where it could go down. It can go down to retrace, or it could just go down. So whether we're bullish or bearish, I expect it to go down. And also it is above like daily open and weekly open and everything. So it just went above weekly open as well. So this is the only trade that I've taken that's a short this whole week. Even though it makes sense, there was times when I really wanted to close, like just during these consolidation periods, because this went on from like pretty much the start of London session all the way until like the middle of New York session, and I was just sitting there looking at it, and it was just not very great. DXY was sort of aligning as well, so that's fine. Basically the only reason why I was like sort of wanted to close the trade was just because we got this consolidation right here happening. So in times like this, I guess the only advice is just to sit on your hands, because there's not much else that I can do. yeah, it kind of takes experience to figure out what your plan is and just stick to your plan, because this is like, you definitely don't want to just get out here just for it to go down and then you enter somewhere here. It's designed for you to do that. It's designed for you to panic when it goes up and then sell, and then you get out. I mean, you buy back, you get out, and then it just dumps, and then you sell again, and then it goes back up. So that's why I wasn't really worried. And there was unemployment claims news tonight, but usually during unemployment I don't really care too much about it because it doesn't really move that much. As you guys can see, like, yeah, like we got movement, but it's not, it just seems like normal price action to me. Like this and this is pretty much the same, so it's not like crazy price action that will just take me out. Yeah, it's pretty much just about like building conviction and stuff, because as you guys can see, a lot of my videos, they're pretty much the same thing. Like my trades, they just happen over and over again, and they're pretty much the same thing all the time. So that's the reason why I started to become more disciplined. And it's also because I'm making a conscious effort to be disciplined. Whenever I have thoughts about wanting to, get out early, I've had so many thoughts around here wanting to get out early because I'm already in profit. So I just thought like maybe it'll be so much easier if I just get out here. I will keep my winning streak, but like that's not the way that I should be thinking if I want to do it long term. I remember around here I thought about like, if I just take this off now, I will have like a pretty positive week, because I don't want to end this week on like a loss. Although there's tomorrow, but I don't know if I'll trade tomorrow. But that's not how a trader should think. Like, you shouldn't make decisions on this trade based on previous trades that you've taken just because you have been winning. Because if I was losing this whole week, then what? And when you have thoughts like that, just ignore it, because that's not how you should think. You should only take these trades based on your confluences and based on whether the context lines up. The reason why I stayed is just because the narrative was still there and everything was still valid. So that's why I just continue to say, even though I wanted to quit so bad. I hope you guys find some sort of value in this video. Thank you for watching this video, and I'll see you guys in the next one. Bye.